Hey everyone, it's Evan here from the Trade Risk on Tuesday, November 21st, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So to kick things off, happy Thanksgiving, happy early Thanksgiving. It's only Tuesday, but I won't talk to you before the holiday, so I hope everybody gets to enjoy some time away from screens, family. Markets are closed on Thursday. It's a half day on Friday. I believe the markets close at 1 p.m. Eastern time on Friday. Just double check that timing. So we got a real sort of slow wind down towards the end of the week, give you a good chance to sort of get away from the screens and recuperate a bit. Stuff your face with some turkey. The good news is we had all-time highs across the board today. I'm recording this a few minutes before the market closed, so unless something crazy happens, maybe the Dow Jones doesn't get there on a new all-time closing basis, but we got good strength out there today. We're going to jump into all of that right now when we get into the charts. All right, so we'll jump in here with the S&P 500, the SPY ETF. You can see we closed up 1.63 points here for Tuesday. That's good for 63 basis points to the upside, a little more than 0.5%. And the big news today is the breakout and resolve of this sideways range that we've been in for nearly 4 weeks or so, ever since topping out around 259. So before we look at that, let's take a look here at the weekly chart. And in our last video update on Friday in the weekend edition, we discussed the fact that we've gone 4 weeks basically sideways nowhere here in the SPY, and we're starting to see movement and progress in a directional fashion, this time to the upside. We did map out, kind of looking back last time we went 4 weeks sideways, it materialized to a slightly larger pullback to the 20-period EMA, and in this event, it doesn't look like we want to get there yet, but it's early. It's only Tuesday. It's Tuesday with, half of the time due to Thanksgiving closed Thursday, half day Friday. So we got about a day and a half left of trading for this weekly bar to finally close. We need to see how we in fact close. Can we stay above the past 2 weeks highs, above this 259 level, or do we start to sell off here into the end of the week and we suddenly have a false breakout sort of scenario? At this point in time, I'd want to stick with the trend right now, which is convincingly higher across multiple time frames, and we're seeing breadth start to improve and all of the major averages sort of follow up here. So if we look at the daily time frame here, this is what set us up for today's move. Last Thursday we had this nice kind of breakout bar to the upside. The market really had that change of character, pivot to the upside. We were in this sluggish to downward consolidation across the IWM, the S&P, the Qs. Everything was kind of sluggish and heading lower. Market internals were kind of on that uneasy footing, looking like they could start to really roll over. But we got this pop higher last Thursday that broke some short-term trend lines, got us about above some of these fast-moving averages. We closed out the week with this inside day. We had another inside day to start here on Monday. So we kind of had these back-to-back, very coiled patterns that usually tells you that there's a move imminent, that the market is about to enter a period of sort of range expansion and to be on the lookout. And in this case, today, Tuesday, we got that range expansion to the upside through highs. Pretty good volume, particularly given the seasonality around it. We're basically at a 50-day average volume traded today, which for Thanksgiving week, I'd say is pretty good. And it is, of course, to the upside, closing near the highs of the session. So once again, this trend continues to the upside. We've just consolidated for 4 weeks. So be careful saying, look, we're overbought again, or this market's too stretched here. We did, again, looking at that weekly chart, just move sideways in the S&P 500 for 4 weeks. This is what I would consider a potential day one breakout. And there are periods or areas of the market that are extended, right? If we go into a sector by sector basis or individual stocks, I can get behind that thesis. But as the market as a whole, we have just spent nearly a month or so kind of moving sideways, and this is pretty constructive action here from the market in general. So that's the S&P 500. If we look here at the IWM, we can see just a tremendous amount of strength here as well. We see a nice kind of V-shaped rally, as we should be very accustomed to over the length of this bull market that we've seen over the past particular few years in general, specifically. But we got this nice V-shaped rally off of this kind of short-term capitulative low here. We undercut the lows here that we made for about 4 days. We reversed, tried to stage a bit of a recovery here into the close, and then Thursday was that big follow-through day to the upside that we discussed there in the S&P 500, and then we just got follow-through upon more follow-through. So very quickly here in the IWM, we are now suddenly closing at highs, and we closed pretty strongly here on the day. We had this gap and go, so we got this open gap higher here from today. That if you want to maintain upper level momentum for you bulls here in the Russell 2000, you'd like to see that just hold. You'd like to see more continuation tomorrow, or at least some upper level digestion kind of stay in place. We're still long the IWM. If you recall, watch a few videos ago, we sort of documented the entry. I think it was this day right here where we got involved in it, sat through some chop. We took some profit here, almost a third of that position off right around this 148.50 level. And we still have the majority of that position still on, riding this newly found sort of breakout and momentum to the upside. And we're going to see if that can get us a little bit further, maybe take a little more profit tomorrow if we see some more extension to the upside. But we'll play it by ear on how the market acts tomorrow. So the IWM on a weekly basis looks really fantastic here, given the fact that it digested or pulled back for about 7 weeks in here off of this 150 level, just kind of pulling lower, and mostly through time until the very end here where we started to accelerate down a little bit and kind of retest this old level around 144. That proved to be the reversal week last week, and we're getting follow through so far, up almost 2% already here on the week. So very constructive action here for the small caps, and looking at this trend after this consolidation, once again, I'd want to be cautious for people to say, this market is again overbought now. I'd argue that, 6 weeks of consolidation, this was the period in here where we could probably say, the market's overbought, it's due for some corrective action. We got that, and now we're seeing the reversal and a potential new leg higher emerging. So anything's possible. Again, we're looking at weekly candles here. The week's not over, so let's see how we finish out the week. But so far, so good here for the Russell 2000. And finally, if we go to the Nasdaq 100, new all-time closing high right up there near the highs of the session. This one had been sort of a leader here recently for the major averages. We had some new highs developing here late last week. We pulled back a little bit, and now we're pushing higher again to new all-time highs. So again, the Qs, very constructive, continue to remain a leader right now. And again, if we look at the weekly chart, you can see certainly riding high. Again, we're stretched far away from the 8-period and 20-period moving average. There's clearly momentum there. The trend is strong, but we are starting to break above this kind of double top, or these last 2 weeks highs here. And that could signal, again, another few days of upside at least. If we can hold that breakout, if we can hold those upper levels. So Qs look good, Russell looks good, S&P 500 looks good. I think the Dow ended up getting there. We don't look at the Dow too often. See on the weekly chart, you could see it's stutter stepping right here. It's right at these highs, so might have been a new daily closing high. Yeah, it looks like we did get it in the Dow Jones as well. You can see maybe a little bit slower, but the Dow had a huge move throughout October and late September. So this is probably still, kind of trying to work off some of that. You can see as shallow as it got was the 20-period moving average. And again, it looks like it wants to get going again as well. So from the market perspective as a whole, things are looking good right now on this holiday shortened week. Let's get into some other markets. We'll go to TLT next, which had a nice gap higher today. Faded a little bit, didn't close near the highs. Kind of an interesting close here, giving a little bit of something for both sides of the camp here. But TLT is clearing above this 126 level. We're above these early November highs here. And you can see we're starting to get back into territory we haven't seen since September, which is a couple of months ago. It's still a messy range when you kind of zoom out here. There is supply back here, this run up from August. We still have supply up here, the kind of peak from June. So there are still sort of trouble points here for TLT. It's kind of a messy chart, but I'd say in the short term, there's no denying that the bulls have some momentum. If we started to very abruptly fall back below 125 or so, I think that would get you some near-term caution. For now, I think it's tough to fight, but for your active traders, you may find something a little more nimble in there on the intraday side of things. Next, if we go to the commodities, we'll go to USO. so, which is oil, is up 1% today. And you can see again, bulls very much in control here. We had a bit of a pullback late last week off this 1150 level, found some support right at the 20-day moving average here at $11. And you can see we're starting to rally back up, or trying to rally back up. You wouldn't want to see a lower high get put in a rollover. That would probably signal, well, we need at least more consolidation through there. We'd really like to see, this market get back up to this 1155 level. Take that out if you're bullish here. But USO right now, arguably, not much to do if you're on the short side right now. You got to be a little bit cautious until you see, again, some support broken. Natural gas looks like it could be in trouble. Now, there is an interesting pattern that's potentially at work. If you pattern traders, or you like to look at what could potentially be some type of inverted head and shoulders or some support down here, however you'd like to draw this. But this 620 level is basically the line in the sand. That's what I said. Look, I really would not want to see UNG fall back below that level. That was the lows from August, the lows here from October. We dropped below it late October into early November, but we V-shaped right back above it, and basically saying, look, if we want to hold up and really kind of mark this as a potential bottom, I'd really like to see 620 hold. You can see we're right at it now, a pretty ugly looking close, but if we could get a very quick save right here, if the bulls could close us and reverse us higher, kind of V-shape us off this level, you may have something interesting to use as a really tight sort of potential reversal signal there. So something to pay attention to if you're really active. Again, you longer term participants probably waiting for a little more confirmation that a more convincing bottom is actually in the cards right now. So that, I think that's everything. I think we covered it all. Oh no, actually no, the metals. Let's go to gold next. Gold, you could see both gold and silver, real tough start to this week. We had this gap lower, really basically giving back all of the gains here from Friday of late last week. If we talked that, the metals basically had a pretty explosive move to the upside last Friday, both gold and silver. We gave all that back and more, or basically all of that in GLD. We didn't get follow through today. We did manage to close higher, but it still looks pretty suspect here. I think the levels are pretty clear for GLD. You could even use this trend line here that extends from the late October lows here. So right basically around 121 or so, that's where this trend line would start to break. Or you could just use this sort of, horizontal level, this basic low here from late October, right around 120. I think you got this basic two areas of support in here. If we start to lose that, then I think things could get pretty ugly to the downside, or at least run some stops below there. And silver's basically the same thing. We had this nice move higher last Friday, up over 1%, closing above some resistance here, and then we gave it all back and then some on Monday yesterday. No follow through today. You can see it's at a very tight stop here. We're still long this market. Hated the action yesterday, but needed some follow through before we would actually stop ourselves out of it. Didn't get the follow through today. We got an inside day, which, as we know, basically, looking at the S&P 500 at the top of this video, you get those inside days. You want to be on alert for an expansion in range in the near future. SLV could start to expand lower. That would stop us out of our long position, which I believe was initiated right here on the 1st. We've been kind of just sitting patiently in here, letting the market do its thing for almost 3 weeks now. This trade may come to an end for a loss for us if we start to see follow through to the downside. So paying attention to that heading into next week. And if you want to be aggressive, or if you want to look at this as a potential short opportunity here on this breakdown, something to consider. Let me get out of my position first before you do that. That certainly would be helpful. So that's SLV. I think that's it. So that's everything. Let's get into some of the sectors here that we want to talk about. First is XLY. So we've sort of been discussing XLY here. Let's see if we can pull this chart up. All right, so we if you watch the last couple of videos here, we sort of flagged this breakout, this consolidation through time, that it spent the better part of 6 months or so moving sideways. We got that breakout late last week. We're seeing follow through here. So XLY certainly on fire there. You want to take a look at some of the stocks within that sector to look for some more targeted, maybe a little more volatile opportunity there. SMH, so semiconductors, continue to lead this market higher here. Kind of looks like the Qs do. We got that new all-time closing high late last Thursday. We had a couple of inside days, or at least one inside day, and then we're getting that breakout to new highs. Volume pretty light here on SMH, but still price action is holding strong. XLK, technology, semiconductors, all acting well. Those are the leaders in charge. They've covered a tremendous amount of ground. They're pretty stretched if you want to look at something, relative to its 200-day moving average or 50-day moving average. SMH is, 18% away, I think, from its 50-day moving average, if I'm not mistaken. So it's pretty out there. But if you're tactical, if you're momentum, if you like to ride the short-term trends and you have discipline to stop yourselves out, that's where all the action is right now. So semiconductors acting well, but you got to be careful, know where you're entering that if you are looking to, continue exposure there. So that's SMH. IYR starting to actually kind of perk itself up here. It had this strong move higher throughout the beginning of November. It consolidated a bit. You can see it's trying to get going here again today. Good volume coming in, maybe heading towards the upper end of this channel here. I could probably redraw that. In fact, you could probably refine some of these trend lines there. Those are old lines that I had drawn from a couple of months ago, but regardless, you can see sort of the strong move higher, impulse leg to the upside, holding above moving averages, consolidating, and potentially trying to get going again now to the upside. IYT, this has been on the laggard list for quite a while now, arguably should still be there, but it is trying to get its act together. It was up 1% today. Nice close, trying to fight to get above some of these fast moving averages. Still, semi-damaged goods here. If you're looking at a weekly chart, though, it is trying to hold on to this 20-period EMA and trying to get back above it right now. So if you got a longer sort of time horizon, or if you get a little more patience here, maybe the IYT is at a good sort of reversal spot and a good place to measure some tight risk against. Healthcare, we talked about this kind of carving out support here at this $81 level, which were the lows from early or late September. Looking like it's trying to do that. It's taking its time here, but getting a good close today, good volume coming in. Healthcare is starting to stabilize there at the bottom end of the range. Financials a little bit weaker. They're still off of their highs here. In fact, you could see you got potentially kind of a head and shoulders potential look here. I'm not saying that is the case. In fact, it's an uptrend, so you want to be careful of calling tops here in such a strongly in such a strong market that is rallying across all time frames. But you can see on the weekly chart here, we pulled back to that 8 EMA. We're starting to get back above it now. So we want to see a strong close here. We want to see ideally for the bulls to get back above 2650 or so. That would be the best scenario going forward to sort of invalidate this pattern and start to re-challenge some of those highs for those of you who even like looking at patterns. And finally, on the downside, the one sort of cheese stands alone sector right now is energy. Energy, remember, had this kind of breakdown back through these prior highs here from early October. This resistance right around under $69, and it's kind of comfortably hanging out here right at this $67 level, below some of the fast moving averages. So taking its time, not really following too much in the cues of maybe even USO and some of the recent performance that it saw. In fact, it's kind of diverging to the downside. So a little caution there, but it's still holding support. So it depends on your time frame. You may find this an interesting spot to add some exposure near support. If you're looking for momentum, then you'd probably want to get us back above 69 or so to the upside to continue that trend higher. So that's what I have for today's video. Hopefully you've had a good week trading. We only got about a half a week left. We got a day and a half left of trading. Again, enjoy Thanksgiving. Hope you get to spend some time with family and friends. Thanks so much for watching. Appreciate it. If you like the videos, do subscribe to our channel, and look forward to talking to you again on Friday.